I almost didn't record this. I told myself maybe I was reading too much into it. Maybe this was just another volatile stretch and Monday would pass like any other trading day. But then I checked the data again. Then I looked at what happened overnight in Asia. Then I remembered what drops at exactly 10 a.m. Eastern on Monday morning. And that's when it clicked. If you own silver or even Bitcoin, Monday isn't just another day. What happens at the open could reshape everything. Not next quarter, not later this year, Monday. There is a rare alignment forming right now. Multiple forces are converging on the silver market, the crypto market, and stock futures at the exact same moment. Most investors have no idea this setup exists. Positioning, timing, technical pressure, key economic data, all of it points to Monday morning. This isn't hype. This isn't fear marketing. These are mechanical factors you can verify yourself if you know where to look. By the end of this breakdown, you'll understand why Monday matters and exactly what signals to watch when markets open. I want to be clear about something up front. I don't call out dates casually. I don't manufacture urgency. When I say a specific day matters, it's because the evidence says it does. Monday, February 2nd, 2026 is one of those days. Individually, each factor would be noteworthy. Together, they create a pressure point that demands attention. Before we even get to New York, you need to understand what already happened while most people were asleep. Overnight, India's silver market took a hard hit. A sharp, fast sell-off swept across one of the largest physical silver markets in the world. Futures prices dropped aggressively in a single session, wiping out tens of thousands of rupees per kilogram. Selling wasn't isolated to one city or one exchange. It was broad: Chennai, Mumbai, Delhi, Kolkata, uniform pressure across every major hub. Why does that matter if you trade in dollars? Because India isn't a paper-driven market. It's one of the deepest physical silver demand centers on the planet. When Indian buyers pull back hard, it sends a signal through the entire global supply chain. It changes sentiment before the US market even opens. Asia trades first. Asia sets the tone. By the time New York wakes up, the damage, or the recovery, may already be underway. That weekend selling creates a fragile backdrop heading into Monday's US session. If that pressure spreads through Shanghai, Hong Kong, and Tokyo during Sunday night trading, silver could open sharply lower in New York. A gap down of 3, 5, even 10% is not out of the question after weekends like this. It's happened before. That's the backdrop. Now let's talk about what collides with it in New York. Monday isn't important because of one thing. It's important because of a convergence. The first piece is the Asia to US handoff. Silver futures reopen Sunday evening US time when Asian markets come online. From that moment until the New York Open, price discovery happens overseas. If Asia continues selling, New York inherits that weakness instantly. If Asia stabilizes or aggressively buys the dip, that strength carries forward. The US Open doesn't start the move, it reacts to it. The second piece hits at exactly 10 a.m. Eastern on Monday, the ISM Manufacturing PMI. This is one of the most market-moving economic releases of the month. It directly influences expectations around growth, inflation, and Federal Reserve policy, and silver sits right in the crosshairs. A strong ISM number suggests economic resilience. That tends to support a stronger dollar and tighter policy expectations, both headwinds for silver and Bitcoin. A weak ISM reading signals contraction, rate cut expectations, and dollar weakness, fuel for metals and crypto. Expectations are sitting right on the knife's edge near the expansion versus contraction line. That makes any surprise dangerous. A print materially above expectations could slam silver and crypto within minutes. A print materially below expectations could send them sharply higher just as fast. This is a binary event, and it lands right as the market is still traumatized from last week's volatility. The third piece is technical positioning after the recent crash. Silver isn't trading in the middle of nowhere. It's sitting at a critical zone where major moving averages converge. These zones act like pressure chambers. Price doesn't drift gently through them, it coils, and then it breaks, hard. Monday's open, and the reaction to ISM data will likely decide which direction that break goes. The fourth piece is positioning psychology. After a violent sell-off, traders are shaken, leverage is reduced, stop losses are tighter, position sizes are smaller. That creates a hair-trigger environment. Small moves cascade into big ones because everyone is trying to protect themselves at the same time. The fifth piece is the divergence between paper and physical markets. Even after sharp drops, physical silver premiums have remained elevated. That tells you real demand hasn't disappeared. Monday will test whether physical buyers can absorb more paper selling, or whether paper pressure overwhelms everything short-term. All of this lands on the same day, same open, same data release, same fragile psychology. That's why Monday matters. And here's the key point most people miss. The days immediately after a major crash are often the most important. This is when the market decides whether the crash was the end of a move or just the beginning. Historically, Mondays following major dislocations have been turning points. Sometimes they mark the bottom, sometimes they confirm deeper pain ahead. Either way, they tend to set direction. By the time Monday closes, we won't have all the answers, but we will have critical information, and how you interpret that information and how prepared you are going into it can make a massive difference. In the next section, I'm going to walk you through the exact scenarios I'm watching for Monday, how different assets could react, and what different types of silver holders should be thinking about before Asia opens. Now let's talk about what Monday could actually look like, because the setup creates several very different paths, and you need to be mentally prepared for all of them before Asia even opens. The worst position you can be in is reacting emotionally in real time. The first scenario is stabilization followed by a rally. Asian markets absorb the weekend selling, buyers quietly step in, and silver holds or edges higher during the Sunday night session. Stock futures stabilize. Bitcoin finds support instead of cascading lower. Then at 10 Salat a.m. Eastern, the ISM manufacturing data comes in weak, signaling contraction. The dollar softens, risk assets breathe, silver jumps sharply, Bitcoin follows. By the close, markets reframe last week's crash as a panic washout rather than a trend break. This scenario tells you the system absorbed the shock, it's bullish, but only if confirmed by volume and follow-through. The second scenario is continuation lower. Asia extends the sell-off. Silver gaps down before New York even opens. Bitcoin loses a key support level. Stock futures slide, signaling risk-off sentiment. ISM prints strong, reinforcing dollar strength and tighter policy expectations. Selling accelerates. This scenario would confirm that the recent crash wasn't finished and that the market needs more time and lower prices to reset. It's painful, but it's information. The third scenario is chaos without resolution. Asian markets are mixed. Silver opens near Friday's close. Bitcoin whipsaws. ISM prints near expectations. No clear narrative forms. Price swings violently in both directions. Stops get triggered on both sides. And by the close, nothing feels resolved. This is often the market exhausting participants before the real move comes later in the week. The fourth, and most dangerous scenario, is the trap. Silver gaps lower, headlines scream, more downside, weak hands sell, and then something shifts. Maybe ISM disappoints. Maybe the dollar reverses. Maybe physical demand overwhelms paper selling. Price snaps back violently. Shorts scramble. Late sellers are left behind. These are the days people remember for years, usually with regret. Which scenario plays out depends on information we don't have yet. That's the point. You're not supposed to predict. You're supposed to prepare. Now let's talk about what different holders should actually do. If you hold physical silver, Monday cannot force you out. There is no margin call on metal you already own. Your primary job is psychological, not tactical. Volatility does not change the long-term reasons you hold physical silver. Watch Monday closely, but don't let intraday swings shake your conviction. If prices fall sharply and premiums remain high, that's not weakness. It's stress. If you hold ETFs or paper silver, your exposure is immediate. Decide now what your response is to each scenario. If silver gaps down 5% overnight, are you holding, reducing, or adding? Make that decision now, calmly, before emotions hijack you. If you hold mining stocks, understand your leverage. These stocks often move 2 or 3 times the underlying metal. A 5% silver move can mean a 15% swing in your portfolio in a single session. If that kind of volatility makes you anxious, your position size is too large. If you trade leverage, futures, options, leveraged ETFs, Monday is dangerous. Weekend gaps, binary data releases, and fragile sentiment are a lethal combination. Being right on direction means nothing if you're forced out before the move completes. Reduce leverage before Asia opens. Surviving to trade another day matters more than catching every move. If you're in cash, you're in the strongest position of all. You have optionality. You can watch how Asia trades, how New York opens, and how the ISM data hits, and then act with better information than you have today. Now let me tell you exactly what I'll be watching, hour by hour. Sunday evening, when Asian markets open, I'll watch whether silver gaps up or down from Friday's close and how volume behaves. Heavy selling with expanding volume suggests continuation. Stability or quiet buying suggests absorption. Overnight into Monday morning, I'll watch correlations. Is Bitcoin moving with silver or diverging? Is the dollar strengthening or rolling over? Is gold confirming or contradicting silver's move? At the New York Open, I'll watch stock futures. Risk on or risk off matters more than any single asset. I'll watch mining stocks for confirmation. They often move first and exaggerate sentiment. At 10 a.m. Eastern, everything pauses for ISM. The first minute is algorithms. The next 10 minutes are humans. I care less about the initial spike and more about what happens after. Does the move extend or fade? Does volume expand or dry up? By the close, I'll ask one question. Did Monday clarify the trend or did it increase uncertainty? That answer determines what matters next. Now let me prepare you for the emotional side because this is where most people fail. If you held through last week's crash, you're already shaken. If you sold, you're wrestling with regret. If you bought the dip, you're second-guessing yourself. Whatever you feel on Monday, understand this. Strong emotions almost always push you toward the wrong decision. Fear makes people sell lows. Greed makes people chase highs. Regret makes people hesitate. Euphoria makes people overextend. The market feeds on this. That's why the most important work happens before the open. Decide your plan now. Write it down if you have to, then execute it, regardless of how loud the noise gets. Let me leave you with a few final warnings. Do not trust the first move. Gaps get filled. Headlines lie. Let the day develop. Do not underestimate the ISM data. A surprise in either direction can move markets violently. Do not ignore the physical market. If paper prices fall while physical premiums rise, something is breaking. Do not assume Monday defines the entire trend. One day doesn't make a market, but pivotal days do shape them. And finally, remember this. The market does not reward the smartest. It rewards the prepared. Monday has come whether you're ready or not. The question is simple. When the dust settles, will you be reacting to what happened or calmly acting on a plan you made in advance? That difference is everything.